How to repair credit after paying off your collections. In this video, we're going to discuss strategies to get those negative marks removed after you've already paid them off. So in this episode, we're going to talk about how a collection originates, what to do if a collection has hit your credit, does paying off a collection or settling it make any sense at all, and we'll finish with potential strategies on how to get collections removed from your credit report. There are three biggest credit score killers when it comes to a person's personal credit. The first one is going to be late pays, then it's going to be charge-offs, and then it's going to be a collection. Now, a collection typically evolves after all that's happened. So you have an account that went into negative status. In other words, it went unpaid. Let's say it's an account with a financial institution. It goes 30 days late, goes 60, 90, all the way up to 180 days late. Now you've got 6 months of late payments. That account can then charge off with the original creditor, which means that they've written it off on their bad debt expense. They're still going to try to collect on it, but they're no longer trying to pursue collection on it in a normal fashion. They can ultimately sell that debt to a collection agency, and now you're stuck in a situation where we've got a collection to deal with. So think about that. We've had a lot of trauma from the one collection. 6 months of late pays, charge-off status, and now we get a brand new shiny collection to boot, a little cherry on top. Now remember, on-time payments are 35% of your score. It's the biggest bucket in the credit scoring algorithm. And what that means for you is that a collection is actually going to impact you in a very significant way. Are all collections created equal? Not necessarily, and it really depends. So we're talking about the issue with the original creditor, right? The financial institution that evolves into a collection. On your newer scoring algorithms, FICO 8 and FICO 9, they're going to account for collection activity from a financial institution in a bigger way than they would, say, for a medical collection, right? Those are going to be the newer scoring algorithms. However, medical collections impact your mortgage score just as severely as any other type of collection. And the reason is because the mortgage score, FICO 2, 4, and 5, is actually a 20-year-old algorithm. While the newer algorithms account for the differences in collections, the older algorithm does not account for the differences in collections. So that means that if you had perfect credit and you have a $30 medical collection that hits your credit across all three bureaus, it's likely that your mortgage score is going to tank. However, your FICO 8 or FICO 9 score will not be impacted as severely. It recognizes that it's just a simple medical collection. So we know that collections are a major issue. So the question is how do we avoid them altogether? A lot of clients that are sent my way, they genuinely did not know they have collections on their credit profile. They had no idea that they had 3 different collections that are from some medical facility for a blood work test that wasn't covered under insurance. They wouldn't even know that existed on their credit profile. The number one way to try to deal with collections is to not let them happen. And this goes without saying, paying on time is part of that, but then also checking your junk mail. You would be surprised how much junk mail I get in my mailbox every single day. I mean, it's a ton, and if I wasn't such a detail-oriented person, I'd probably let some of that stuff go. In that junk mail, there could be bills that were overlooked that you didn't even know existed. And now you've thrown them away, and that's how a collection ends up on a person's credit profile. Okay, now before we move on to talk about effective strategies on how to get a collection removed, please like my video and subscribe to my channel. I'll be working hard to bring you a video each weekday over different personal finance topics, including lending and credit. Okay, so what do you do if a collection has hit your credit? The first thing I say you do is you relax, right? Relax. Things happen, and there's oftentimes very pragmatic ways to deal with just about anything that's negative on a credit profile. If you've had a collection that's hit your credit profile, the very first thing that you should do is you should write a debt validation letter to the original collection agency. Okay, now what you're doing in that letter is you're asking them to provide information about the debt. We want to make sure that you can recognize the debt. So you're going to write a letter, what's called a debt validation letter, and in that letter you're going to put certain things and then mail that off to the collection agency. The first thing that you want to include in the letter is going to be, can you please provide documentation on this debt? Now, a lot of people think that you need to have original signed contracts from the collection agency and all this fancy paperwork. And the answer is that if they have just the name and the amount that you owe, in many cases, that's actually legitimate as pertains to what the law calls for. So in that debt validation letter, you want to include a question that asks them, who is this from and what's the amount that's owed? You also want to include a cease and desist, which requires them to only contact you in writing and not by telephone, because that can be really annoying if they're calling your family and friends and work. And then you also want to specifically dispute the account. Just go ahead and include it in that debt validation letter and let them do their work. The second step is going to be to send letters to all three of the credit bureaus. You're going to list the account up top, the account number, and then beside that, you're going to put the specific reason that you're disputing this account. And in this case, most people do not recognize the third-party collection agency. In other words, you may have had debt with a specific financial institution or somebody else that you recognize, but when a third party purchases that debt, they do it in their own name, meaning that it's going to be under a different third party, and I can tell you that most of my clients have no idea who that collection agency is. So you can dispute that collection under the pretense that you've never done business with this company, please delete from my credit. Or I have no knowledge of this company, please delete from my credit. So you went after the collection agency, you went after the three credit bureaus. The only thing left is to go after the original creditor if it makes sense, right? So you've got the three different pieces of the puzzle. You've got the collection agency, the original creditor, and then the three credit bureaus. So question, does it make sense to send out this documentation if I have a collection on my credit, but I've already paid it and it shows a zero balance? The answer is you absolutely should, right? You should still go after the collection agency, go after the original creditor, and go after the three credit bureaus. It makes perfect sense to do that. Now, a lot of people think that when they pay a collection, the collection goes away, but that's not the case. It just shows that it's a settled collection on your credit profile and does just as much damage in most cases as a collection that has a balance on it. Now let's say that you get verification back on the collection. And let's say that there's a balance on the collection, the bureaus have verified it, the collection agency says it's legitimate, the original creditor says it's also legitimate. Remember, there's lots of different areas within that account that you can actually dispute as well. Remember, the Fair Credit Reporting Act says it has to be 100% accurate in order for it to maintain its status on your credit profile. Here at Creative Credit Solutions, we actually have specialty software that helps us find inaccuracies within that account. So I recommend that you get a tri-merge report and you look at how the account is listed at each bureau. And if there's any inaccuracy across all three bureaus, that's a good starting place to dispute. Now, does that mean that the collection is going to go away from your credit profile just because you found an inaccuracy? Not necessarily. Not necessarily. They can just correct the inaccurate thing that you found, and that's usually what they do. In some cases, it'll get removed, and in some cases, they just fix the thing that you had pointed out. So one of the common questions that I get asked all the time is, should I pay off collections? And I would say that's a twofold answer. The first is absolutely not initially, right? We don't even know if it's legal debt. We haven't got verification on the debt. We don't know if it's accurate. We don't know anything about that debt. But if I've gotten to a place where the debt is valid, it's legal, I've challenged it in many different ways, and it's definitely legitimate debt, sometimes it does make sense to settle items. Now, it doesn't necessarily always make sense to settle all items. It really just depends upon the age of the account and several different factors. As far as our clients are concerned, if we've done our due diligence on the account and the collection still remains, we certainly recommend settling it. The first reason you might settle an account is because it's going to give yourself a higher probability of getting it removed from your credit profile. A lot of collection agencies will offer up pay for deletes, which are where you pay them and they'll remove it from your credit profile. And also disputing after you've settled the item will give you a higher probability of getting that removed. Obviously, collection agencies are looking for money. You've given them their money. Whether they agree to remove it or not, once it's been paid, oftentimes you can be aggressive in getting that removed, whether the collection agency agrees to it or not. The second thing that's applicable about settling collections is it's actually going to improve your approvability rating. And what that means is that if you're applying for something and it shows that you had issues, but all those issues have been buttoned up and settled and taken care of, you're obviously going to have a higher probability of getting approved. So will it necessarily help your scores if you settle an item? If you get it removed, it will. If you just settle it, probably not. But I'll tell you that people that have all of their negative items buttoned up on their credit profile often will get approved for more things than people that have higher scores but have not settled items on their credit profile.